AWS, explain that. And this is really, to me, I think how Amazon is tied into AI as well as some of their retail. But explain AWS in regards to Amazon. It's not their biggest revenue base, but explain to AWS.
Yeah, so AWS is all about cloud computing. Now, what it says here is that $332 billion Amazon makes from retail, what you're calling retail, and then they make about $100 billion in annual revenue from AWS. But the AWS is way more profitable than retail, but nonetheless, as you said, the retail makes a lot more. So let's talk about like AI and cloud computing. So Andy Jassy, their CEO, says that 90% of companies' IT budgets are still focused on premises computing, meaning that not as many companies as you would think have really moved to cloud computing, but there is a huge push towards cloud computing. But even taking cloud computing to the side, companies need to host websites. They need to do basic things other than putting all their data in the cloud, and they still use Amazon for that. So I would say the majority of websites that any given person accesses on a given day probably are running on AWS rather than Google's servers or other little companies like Ionos and Hostwinds and all these other little hosts. Most of the websites you visit, most of the apps that you use are running on AWS for the backend. And people don't realize that. So AWS is very deeply integrated into the internet, the core of the internet. And now they're trying to integrate into AI and AI inference, AI training. So they're having good success with that. And some have proposed that AWS, Amazon, may be catching up or even starting to overtake Microsoft's Azure. Now, AWS, Amazon is a little bit more agnostic on models. So we know that Microsoft owned 49% of OpenAI. So they were kind of pushing ChatGPT models more than other models like Anthropic, which is a proprietary model, or Anthropic's Claude, or Llama, which is an open source model made by Meta. So Amazon don't care. Amazon says you can use Llama, you can use Anthropic's Claude, you can use whatever you want, as long as you're using us for the AI hosting, the AI inference, the AI workloads. So I think that Amazon, this is kind of one of my big takes on Amazon. I think they're going to catch up and maybe overtake Microsoft for AI compute, because Amazon has been the leader in cloud computing and online workloads in the past, and they will continue to be the leader as we shift into this new world of AI workloads. So yeah, that's kind of one of my big takes on Amazon is that, hey guys, don't think that they're behind Microsoft. They're catching up. They're doing well. And then I have like 6 or 7 other points on Amazon AI that I'd like to make. But if you want to respond to that first, I can.
No, I just want to basically reiterate a few of the things you said. So Amazon, $600 billion of revenue. Okay, 300 billion, half of that is from retail. However, AWS is now 1/6 of that, $100 billion of revenue from AWS, which the profit margin there is much greater than in retail. Now, I would say that has grown substantially. That's 1/6 of their business now. So I just think for our people that are out there listening to just understand what Amazon does and how they make money is number one, retail, bread and butter. I don't think that that's going anywhere. And I think more and more people are going to continue to use it. It's comfortable, it's easy. AI is going to help in regards to selling to the consumer. And then you have AWS, which we have seen substantial growth. The one thing you didn't mention about AWS, which you may, is there's multiple different payment models, which I like. There's tiers of payment. You can pay as you go. You can do subscription services. And so I think it's very variable and consumer friendly. I haven't used AWS. Do you use it for your business, James, at all?
I have a little bit in the past. But what's funny is if you're using something else, it's probably running on AWS underneath. So yeah, AWS is just so deeply integrated into everything. But look, Amazon is doing a lot of other stuff in AI also. So they have a large language model called Q. They say that they're actively incorporating AI into Alexa. So we're looking forward to when Alexa actually beats out potentially Siri. So all this talk about Apple Intelligence, which hasn't really shown up on the iPhones yet, may not show up on the current iPhones that most of us have. But guess what? Those little devices, Alexa devices that almost everybody has in their home, they're listening to music on, they're asking questions to, those things might pop up with AI, an AI voice assistant, before Siri really gets it properly integrated. So look out for that. Now, if anyone's been on Amazon recently and has looked at an item and scrolled down to look at the reviews, you might have seen Rufus. Rufus is their AI shopping assistant, and Rufus summarizes all the reviews that have been left for a product and tell you the pros and the cons of that product. I've seen Rufus like 30 times. It tells you how much I shop on Amazon. It's probably too much, but I mean, they're doing a lot of other things too. So they've got something called Project Private Investigator, which is identifying defects in products before they ship out. That's an AI project. And then one thing I'm really excited about, and I don't want to jump too far ahead of you here, but one thing I'm really excited about is their work on robotics, and I can get into that more if you'd like me to.
Yeah, that's maybe let's. I want you to address that at one of the last things that we talk about. I really want to hear your because I think Tesla also their robot. I mean, sexy, just sexy. I'm bullish on AWS. I am bullish on retail. Let's. One of the last things I also want to mention is Whole Foods. I love Whole Foods as a grocery store, and that is also an Amazon-based grocery store for our listeners out there. And so you're not just investing in a company that is just AI. For example, a company like Tempest AI, where you're like, hey, I feel really uncomfortable with this. I don't know exactly what this does. Amazon is something that you can understand. It's one of the biggest companies in the United States. And to give you my 30 seconds, I am bullish on Amazon because my price target of Amazon is around 220 and I expect 30% growth. So the average market growth for a year, just the S&P, is anywhere 10 to 15%. Let's just say that 10, 11%. Amazon, I think, is 20 to 30%. And so you're going to get a better return by investing in Amazon. Now, again, I will mention my price target. It's around 220. Amazon's about $185 a share. Earnings the end of this month. So keep track of that. Keep a lookout. I was a buyer of Amazon. I currently hold a position, but I personally don't think this is investment advice, but I was a buyer of Amazon when we had that drop and Amazon dropped to around $160 a share. I was gobbling up as much Amazon as I could at that time. So go ahead, mention the robot for me, what Amazon has in store for us.
Yeah, and you jumped into price issues. So one thing I will say is that Amazon is down 3% in the last 3 months, and Nvidia is up 6% in the last 3 months. So Amazon has underperformed other AI plays, which is why we're talking about it today. So Amazon just hasn't performed quite as well as some of these other AI stocks, and that has brought our attention back to Amazon. So we haven't covered Amazon in full in an episode in the past. We just mentioned it in relation to Oracle and said Amazon is essentially a better cloud play than Oracle. But now we're doing a full episode because, hey, it might be at a decent, I don't want to say it's at a decent valuation because, P ratios are what we look at for valuation or price to revenue in certain companies. But what I will say is it's underperformed just in percent change of price over the last 3 months. It's underperformed some of these other companies. So it might be something that you want to look at. It can make up for that pretty quickly. If they have good earnings, if they have better than expected margins, things like that.
Well, I also expect, let me just address that a little bit. I mean, we talked about at the beginning of this month, going and picking over the next month or two what we expect. And two of the companies that I picked were Amazon and MU. And the reason for Amazon is back when it dipped down to $160 a share, that was the time to buy Amazon. That was the time to buy Amazon because my price target for Amazon has always been around 220, 230. So when you're trying to buy something on Amazon, I think it was back in, let's see here. At one point, Amazon went to around $200 a share back in July. For me, that wasn't the time to get into Amazon, but the time to enter Amazon was back on the drop. When it dropped to $160 a share with my price target around 220, that's a pretty good return. So they're also timing of when you enter some of these equities underlying, it can make a difference.
Yeah, and in relation to that, their forward PE sits somewhere between 24 and 34, and that is a huge range. So when I say forward PE between 24 and 34, what I mean is the most optimistic analyst estimate for next year's earnings puts them at a forward P of 24, and the average analyst estimate for next year's earnings puts them at a forward P of 34. So if you want to throw a dart somewhere in the middle, you could say maybe their forward PE is around 28 if they do okay over the next year. And maybe if they do really well, their forward PE is at a current price to earnings of 24. And that means it's a good buy right now. So investing always depends on how well you think a company is going to do. How well do you think they're going to do in the future? Not just next year, but the year after that. And one thing that excites me about Amazon is their work in some of these critical fields of expansion. So are they second to Tesla and SpaceX in satellites and in robotics? Maybe, maybe not. Let me just make a couple comments on that.